Good afternoon, Scott Redler. Welcome to today's recap. So today we came in, the futures were down. We had some poor news out of China as far as their GDP down to 7.5 versus 8. Some manufacturing news out of the Eurozone. You mix that up with some stocks or groups starting to break their 10 and 20 day, and it looked as if some type of composure change was coming into play. Now, as I take a step back and I look at the close, it seems as if we're in the same pattern that we've been in since the December 20th gap and go, but as we stair step higher, it gets a little trickier to stay with. Now I know for me, I messed up a few trades. I had a few good ones, whereas I sold some strength, I added for cash flow, IBM being one of them, but it just shows you how if you're too tight, you get taken out of your trade. If all you guys know, I've been buying IBM, holding it, traded it through 195, had some nice cash flow, sold above 198, held again, and then today, off the bat, it was strong, and I bought a lot through 199.29, and I felt like a champ selling above 250, 270, above 201, and then once the market started to get weaker, as a momentum trade and we traded back below that 199.23, I got stopped out of my trailer. And now we closed above it, and now I have no more IBM, so I'm in that position of what do I do now? But that's just a scenario that happens to traders every single day. That's why you have to know your time frame. And I really probably I shouldn't have sold the rest of my IBM unless I waited for the daily close. But it could have just kept cascading lower like the market, and then I would have been in harm's way. So for me, that's the set of rules that I follow. So you have to figure out what's yours. So if you look at the chart of the SPX and you see here, the trend is still in track. This is the gradual trend that we talk about, the October 4th low, a higher low. It's working its way up. We're well above the 50-day. So what do we do today? Today we broke below the 10-day moving average. So I want to show this trend a little closer up so we could all take a look at it a little closer here. Just so, if we want to do a little dissective work or detective work here to see what could happen, okay? First of all, if you look from where this was that descending channel where we had the gap and we went up higher, traded above this descending channel, and here you go. So we rode the 10-day all the way up. Now let's look at a few times when we tried to break below it. This was one of them, right? Broke below it, couldn't close below it, and then we continued. In this area, remember that outside day? This outside day was on January 26th. Traded through the previous high, came back below. Somewhat what I was pointing out right here. Remember that day? I tried to show you how this day was very similar to this one, and this one produced a move from the high of 1333 down to his low of 1300. So this was 33 handles, a 3-day move that then, after closing below the 10-day and spending only 1 day there, we resumed. So then, this next little area was different than the previous. We hovered here at the 10-day for a few days, but never really closed decisively below it, then made new highs, and then touched it again. And then here you are with this outside day. We then breached this floor. This was a floor that I was trading. It's actually on the Twitter sphere and on my radio, when we broke this area during the day and it felt heavy, I sent out a note that I was going to add to my hedges and my diamonds, which I did. And then I did take some off when Apple put that low in below the 10-day. But, the question is, a lot of people who didn't take it off are now sitting there, what do I do now? But let's get to that after. So, at the end of the day, market regrouped, closed relatively, fine. The Dow was, I think, down 20 points, not even. And we didn't even get to the 20-day. Okay, the 20-day in the SPX, if you look right there, is 13. That's a 21-day actually. That's why it's a little bit lower. I use a 20-day. So if you go back to your basic studies, go into your moving averages, and you put, I want to have the 50-day in also, which I do have. Okay, let's do one more time. Let's go in. So I'll give you a little e-signal tutorial here. So you go to your moving averages. Where are they? Where are we? Okay, I'm like a little disheveled here today. Basic studies. Here we go. Moving averages, there you are. And if you look at the 20-day, you plug it in. This is how easy it is to get some analytics in. So there it is. Here's the 20-day, and that's what I put in my note. That 20-day was 1358, and the low today was 1359. So we held this by a handle. So if you go and remove the 21-day because someone was doing a little seminar in here, there you go. You put this over here. And the last time we touched the 21 day, I believe, was the day after, okay, this igniting bar. So during this entire rally, only once did it come close, okay, and that was after that 3-day move after the outside bar. So we're going to have to see what happens in the next few days. Do we go sideways and build a little bit of a floor with a new point of reference today? Or do we break below this and things change, and then we have a few levels to watch, this one being one of them, and then the floor here at 1340. But as of right now, I think things took it, the market took it in stride today. So it's almost like as much as things feel like they change, if you come back to me, they really haven't. So you have to just really know your time frame and know what you're looking at, because there were some groups that broke their 10-day and are below the 20-day, and if you bought wrong, you're not feeling as positive or bullish as recently. So today with the IAM, the Russell here, okay, this group broke below both moving averages right around here, so you could have sold some, and then right in front of the 50-day, it reversed. Did a tiny bit of a red dog reversal through the previous low back up. So now maybe we'll see what happens here if it could retest this. If it does, you're going to see a little positive movement in the market, and then you have to see what happens from there, because usually you come down, you retest, and then that's when you figure out whether or not this is valid or not. So here, 50-day right there, we'll see what goes on in that sector. And if you look at the SMHs, I talked about the weakness there also. Here was the break. So if you saw this relative weakness and went out short on Friday, yeah, you had a nice trade, didn't trade much off the lows. It's still above the 50-day. But again, the market looks as if it's intact and looks strong, but if you chased here or you bought here and you didn't have the proper sell rules in this area, you're a little bit worried. But if you looked at the sector starting to roll over and you got out of it, just say on this little king and queens formation, we have a green day match with the red day, then you'll be saying, okay, look at this. I could buy back the SMHs perhaps at the 50-day at 33, and then even perhaps down here where it broke out, or where that more gradual uptrend comes into place. So it's all your timing, and it's all your time frame, and it's all how you enter and exit. So with that said, you could be an investor in Apple and you have no worries right now, but if you lately chase this move and bought late last week, right now you have a few decisions to make, because we broke that upper pivot with some velocity and volume today. So if you look at Apple, I talked about it a few times. This is where I drew that line this morning. Okay, I drew both these lines. Wow. So if you look at Apple here, the first trigger was below 542.50. I put that, in the blog, my Twitter sphere, saying below this, you could see 538 to 535. That we saw. Then it broke there real quick. And what did it do? It tested the 10-day moving average. I actually pushed a little bit below it because it was just so fast and furious. But what did it do? It tested the prior breakout. So you could have shorted below this area and covered into the 10-day, because look what happened here. The 10-day held, but this time we needed 2 days for that to happen. I wish we had 2 days here this time, but this time the 10-day, since you had so many small little days here, caught up, and it went to it and bounced off it. So you could have had a good short, with that being a calculated cover, which I did also put out in the blogosphere saying, 10-day, probably a decent area to cover. I said it on the radio as well. And then some actually, the first time I got here, I got long for a nice $5 trade, and then and then it had a nice rollover. You go to the, actually I'll show you on the 5-minute chart. So here was that move lower, and then I know that I was talking about 538 to 540. It went a little bit through 538. Some people got stopped out, some people stayed with it, and then if you would have drawn your little ascending channel here, this was on this little push through failure. Even if you got stopped out, you could have entered right here. I know Sperling was talking shorted 536. And then it wound up trending all the way down the rest of the day until finally, basically it retested. This time it wasn't as erratic or crazy or volatile, because it had the whole day underneath its belt, and put in a higher low versus that support. And then once you had this igniting bar, I actually was trying to short a little bit, which was, I was just spun around there. And then it ignited, I covered, and now we closed off the lows, and I think we're going to need some more data with a big event coming in for Apple on Wednesday. As far as IBM's concerned, you look here, nice breakout. Today IBM didn't know that we were weak, and this was the line I drew this morning. I said above this 198.89 or above 99.23. It's great for cash flow, and I was long overnight. I added a lot to this, which saved my morning because I came in decently long. It went quickly to 201 and change, and then with the market weakness, when it traded back below, I stopped myself out, and now I'm out of IBM. It doesn't mean you have to be. If you're an investor, it closed strong. As a momentum trader, it's still acted well and closed okay. I probably should have added on the close. I just didn't, but I caught a nice 2-day trade there, so I'm not trying to overtrade it. But I am out of this. This just shows you how you could use your tier system. I was in tier 1 in here, added a tier through this prior breakout, sold some into strength, was in enough that I was comfortable holding it this time, saw the relative strength today, bought more through this area, sold some above 250, 201, and I would have stayed with it if it would have stayed above this and trailed it, but you know what? I got out and now I'm flat because I remember a similar trade with Qualcomm that I was holding after earnings, and we were waiting for it to break through 62. It finally went and stayed with it. It went through 63.50, and then I was like, you know what, that's my measured move. I'm done with it. And then it traded back below. And I haven't looked at Qualcomm since. And now if you look at Qualcomm, this was that strategy. If you remember, here was the gap. Okay, this was your add above the high of that, which was around 62. You had to move all the way up to almost 63.81. I think I sold the most of it just at a pure like, okay, I'll take that trade right here. And then look how it's trickled lower. So at this point, it's below the 10 and 20 day. It actually came into this range and closed off the lows. So who knows? Maybe with some more time, I'll revisit it again. But at this point, it hasn't even really been worth your time. So sometimes there's something calculated for a pressure point and sometimes not. But if you did sell into that, today was a decent day to maybe nibble some, but I didn't, and I'll just see if we could build a new floor, and then at some point, perhaps we'll get a little downtrend like this, and we'll see if we could trade it through it, and then you'll see Qualcomm resume, but that means also the tech sector will get a little bit better. And then as far as some other trades, I threw a little caution out there because I knew the numbers out of China were a little soft, so I figured maybe that would throw some cold water on the strength that Baidu had on Friday, and it looks like Baidu needs more time. It also, if you look at why trend lines are so important, it came up to this trend, closed strong, opened down, and failed right there. So we'll see what happens tomorrow. You look at this nice juicy uptrend. Perhaps there might be a short through this if we close below it. We shall see. Couldn't get through here. It's getting tight. So maybe we'll definitely keep this on the radar for a trade as we move forward. Amazon, I got out of my puts again. I lost like 60% of the premium. I'm just going to wait, and I think that if we could finally get below this trend line, and I see confirmation that this market's getting a lot weaker and they're letting you short things on the lows, I'll add some. It's below the moving averages. It's below this trend line. It's starting to wedge here. So we'll see what happens as it gets closer. And then I guess when we see that the market wants to head lower, that's when this will. But there is a small arb going on that I hear from a lot of my sales traders where if Apple's going, they're going long Apple, short Amazon, and then short Apple, long Amazon. So if the market's going to pull in, you would think that Amazon showing relative weakness would break down. It might not be the case, because if the market's getting weaker, Apple that's been so strong is probably coming in. Amazon that's been weak might be that reversal type trade, through the ARB, so it might not work. So that's, again, just something to think about. You don't want to always overthink things, but I do know that a lot of computer programs are doing that. As far as Goldman Sachs, I sort of dropped the ball here a little bit because I'm out of the trade for now. If you take a look here, you will see that I thought 118.50 should hold, but I don't know why, I was a little bit too risk averse. If you look here, you had the clean breakout right there through that 118.50. Nice little trade, 2-day trade. I did sell some above 121, but then I trailed some. And then I was using like 118 and then the morning low as a hard stop. And really, if you look at this, it never got below the 10-day or the 20-day, and it's a bank. So that just shows you strength. So there was really no reason for me to get out. And if it does pull in one more day, if we get more market weakness, I might even try and buy here, but we shall see. JP Morgan guys were asking me if I should be buying more. I'm in a very small amount now, and I think that this too, I don't think it gets all the way to here. It might, but the 10-day is around 39.20, and that would be a bit more compelling, considering that every time we've had this move, it's come in, broke the 10-day, held the 20-day, broke the 10-day, held the 20-day. This one, was very erratic, and now we're far from it. So I do think that you'll get a better trade here or a better buy the dip right around here. As far as the casinos, sold those on Friday. Everyone was asking me why. Again, I'm a momentum trader. I trade the trend and I look for patterns, and this was buy one, buy two. This was measured move 130, 132 into a bigger trend. Today, you did get a wider range bar down. I think that I was looking to see if it would hold 124, 122. I'd say with a few more days, maybe the moving averages catch up. This could be a better spot to buy some. Win also on Friday, had the red dog reversal. So early in the week, just to show you how you could be a cash flow trader, it was a great long above that bull flag at 54. And then once it did a push through failure on Friday, it turned into a sell signal and even a short signal for some. And if you did short some, congratulations. I tried Friday and I was almost too enamored with the long side because it was such a good trade that I felt guilty shorting it, but you should never feel guilty doing anything. But this was the push through, came back below. This was your buy price. This was your 54, nice 4-day move. And then it pushed through, so at least you could have done is sell it, especially since it closed back below. Some people shorted it with a stop at the high of the day. If you did so, you made nice money here. So now, strategy moving forward, you do have an uptrend coming into the first moving average. I do think with more time this will be buyable, but I'd like to see it I'd like to buy it a little closer to 54 or see that this 10-day holds for a little while. Sometimes, it hasn't really been to the 20-day in a long time, but we'll see. I want some more data here before I chase back into LVS, but I did sell the rest of it. You saw it leave my virtual trade floor on that day, and people asked me, but Scott, the measured move, you said off the charts was 65 to 68. Yeah, that's the measured move for the year. We're in March, January, February, March, in 3 months. So a lot of trading between now and then, and if you time things, you don't have to sit through what we just saw for 2 days. But then also, you try and be cute and time things and try and be perfect, they leave you also. Kind of like being cute with IBM. I got out of the rest of my shares, I'm flat, and it can continue higher, but it'll probably do so without me, or maybe I'll just trade it a little bit intraday, but it's not a swing holding for me. So again, sometimes it works for you, sometimes against you. If you look at GLD, you'll see here, still holding that low from that Wednesday, but it's been more of obviously a short than a long. Here is your fierce breakdown. Here's where a lot of people got stopped out once it went below the 10 and 20 day. Inside day, came back in, still holding the low here. So if you're long into these 2 days, this should be your stop around 164. If you were short, trying to use a stop here, you probably could even move this line down. And I would say if you're short and you think that it's going lower, at this point I don't think it should get above that last week's little high here of 167.72. So now you have a nice little inside range to trade against, but the longer it goes sideways down here and doesn't take back at least a third of this move, it should control to the downside. But here we are at the 50-day, so there might be some support. So I think you need more data there, but as of now, just keep taking your trades. Some guys are, it's so hard to short when it looks good and buy when it looks bad, and that's what the trade has been recently for gold, so that's why I haven't been as active there. As far as Microsoft, I put a note out on Friday that it met a lot of my targets. Some of you guys said, oh, thank you, it's hard to sell, and they sold it on Friday. If you look now, it did come off from that area on that reversal, and here's that little outside day. It traded through, came back below. That's when I think I sent out the little tweet. And, it's a 2-day down move, believe it or not. That hasn't really happened that much in Microsoft this year. But at this point, it still looks good. It has this rising channel. So what I like to do is if it breaks below this, I'll be looking to potentially buy it for a swing somewhere around this 31.13. So, but it goes to show you how, every trade is different now. We've gone from a stock market to a market of stocks, and that's been the 2012 thesis. So as you can see, some groups are already below the 20-day testing the 50-day, and some are having a hard time staying below the 10. And then you have stocks that have been decent to short and hard to buy with momentum. So there's a lot of different things going on here. So don't be too spread out. Find out where you want to be, whether you want to try and lean on weak stocks or whether you want to try and hold multiple positions until you see a trend change. And right now, I wouldn't say the trend has changed, but it's it's just time to look for more data. And at this point, I'd like to, you'll see by my virtual trade floor that I'm in the least amount of positions that I have, and I'm pretty neutral. I'm going to be back to day trading until I see some areas that I want to put back on for a swing, and I see that, we could do some work above some of these higher levels. And if not, you could always make some quick money short, and there's nothing wrong with that as well. Anyway, Scott Riley, T3 Live, the recap. Have a nice night. I'll see you at the morning call with Brittany Umar.